Good evening, everyone. My name is Sriram from the Commodity and Currency Research Desk at Reliance Securities. This is the Commodity and Currency Outlook for 22nd August 2022. So, starting with the commodity side of things, starting with energy, crude oil, international and domestic crude oil prices remained under pressure this Friday's trade and could be set for a weekly drop as concerns about a global economic slowdown outweighed signs of robust short term fuel demand. Looking ahead, prices could continue to remain volatile and choppy and possibly start the fresh week on a weaker note on Monday, weighed down by recessionary fears. However, bullish comments on output from OPEC General Secretary could cap the downside of things. At the same time, traders will be closely monitoring the efforts to revive the 2015 Iranian nuclear deal. No further updates were available from that situation, but that will be the main trigger for the markets in the coming week. So the range for the domestic crude oil till that time in the coming week will be anywhere between 6,800 to 7,300 in the coming week or so. Moving to the bullion side of things, gold prices weakened to a 3 week low past the vital 1760 dollar per ounce level on Friday afternoon trade and were on track to end the week sharply lower, weighed down by the US Federal Reserve commitment to keep raising interest rates to bring down their inflation. Surging dollar and rising US benchmark 10-year yields also weighed on prices this Friday's trade. Looking ahead, prices could possibly start the week on a weaker note. On Monday, weighed down by rising real rates and the Fed's resolve in bringing down inflation. But the movements can be dollar dependent and data dependent. We have the Jackson Hole Symposium next week, and statement by the Federal Reserve Chair will be keenly awaited there. Of course, we have the inflation data as well, the Fed favored PCE price index, which has always moved the market significantly, and that too which will be released next week, and that will be also a key trigger for the markets in the coming week. So till that time, we feel range for the gold in the coming week will be anywhere between 51,000 on the lower side to 51,900 on the upside of things, while that for silver can be anywhere between 54,650 to 57,300 in the coming week or so. Briefly on copper, international and domestic copper prices recovered from the lows of the session this Friday afternoon trade on some short covering. But looking ahead, going for base metals and the copper side of things, prices could continue to remain under pressure in the coming week on clouded outlook for China's economy. Additionally, severe heat waves in China is causing overheating in power grids, prompting authorities to ration power in that country and in turn hampering the demand for copper side of things. So I think overall we see weakness in the copper prices can extend into next week as well. Some recovery is possible, some short covering is possible, but overall bias still remains on the weaker side. Of course, recent weak numbers from China also added to concerns of the economy slowing down, and that could also have a big impact on the markets and will keep prices under pressure next week. So range for domestic copper for the coming week will be anywhere between 660 on the lower side to 690 on the upside of things. Finally, on the currency side of things, Indian rupee on the spot side weakened against the US dollar on Friday's trade and depreciated for a second straight week against the dollar as the dollar got a boost from strong US labor market data and hawkish comments from the US Federal Reserve officials. The rupee ended at, on the spot side, the rupee ended at 79.77.50 versus 79.6725 in the previous session, while the session low was 79.80. Further weakness in equity markets, strong importers' demand for dollars, and speculative buying of dollars also weighed on the domestic unit this week. Most Asian and emerging market peers extended losses this Friday's trade and has been weakening over the last week or so. Continue to be led by declines in the Chinese yuan, which continue to remain under pressure this Friday's trade as well, and this too weighed on our local unit this Friday. In the overseas market, we saw, as I mentioned earlier, the dollar recovered, in fact rallied against the other currencies, against the basket of currencies yesterday, and remains higher this Friday's trade, supported by hawkish Fed and an energy crisis in Europe, pushed investors towards the safe haven appeal of the greenback, and we see markets going forward in the coming week or so. The rupee could continue to weaken further, extend losses in the coming week, and possibly test new lows on prospects that the US Federal Reserve will continue to deliver large rate hikes coming forward in the September meeting. So the range for the US dollar spot pair in the coming week is anywhere between 79.10 to 79.95, but a break above 79.95 will can we can expect the rupee testing new lows possibly towards 80.15, 80.20 in the coming week. Then again, to reiterate, like the commodity markets, the next trigger for the currency market is likely to be the Fed Chair Powell's Jackson Hole appearance next week on Friday. Also, the Fed favored PCE price index to gauge the inflation numbers will also have a significant impact on the markets for both currencies and commodities. So that's it from our side. Thank you for listening. Have a pleasant day and have a very good weekend ahead. Thank you.